You're about to find out if you're winning or losing at money compared to everyone your exact age. And I guarantee some of these numbers are going to either make you feel like a financial genius or give you a serious panic attack. The truth is, most people have no idea if they're ahead or behind because nobody talks about real numbers. Everyone posts their wins on social media but hides their losses. Your coworker shows up in a new car but you have no idea they're drowning in payments. Your friend buys a house but nobody mentions the massive loan from their parents. Social media shows you highlight reels while hiding the financial disasters happening behind closed doors. My name is Mike, and I help people understand money and make smarter financial decisions. If you want to know exactly where you should be financially at your age and how to catch up if you're behind, smash that subscribe button and drop a like. Today, we're breaking down the brutal financial truth of what people actually have at ages 25, 30, 35, 40, and 50. These aren't motivational stories or success porn. These are the real median numbers that show you exactly where most people stand. And more importantly, they'll show you what you need to do differently to avoid ending up financially average, which, honestly, means financially struggling. Let's start with age 25 because this is where your entire financial future gets decided, even though most people don't realize it yet. At 25, the median net worth is, drumroll please, $8,000. That's right, $8,000. Half of all 25-year-olds have less than $8,000 in total net worth. Now, before you feel too good or too bad about that number, let me explain what net worth actually means. It's everything you own minus everything you owe. So if you have $10,000 in your bank account but $20,000 in student loans, your net worth is negative $10,000. You're worth less than nothing. You're in a hole. The average 25-year-old has about $13,000 in student loan debt. They're earning around $40,000 per year before taxes, which means they're taking home maybe $32,000 after the government takes their cut. And here's the kicker, most of them are spending almost every dollar they earn. At 25, you're either setting yourself up for financial freedom or financial prison. And most people are choosing prison without even realizing it. They're financing cars they can't afford, living in apartments that eat 40% of their income, and spending $150 every weekend going out because they think they're supposed to enjoy their 20s. But here's what nobody tells you about being 25. Every dollar you invest right now is worth about $10 by the time you're 55. That's the power of compound interest over 30 years. So when you blow $200 at the bar this weekend, you're not just spending $200. You're spending the $2,000 that money could have become. The 25-year-olds who get this are putting at least 15% of their income into retirement accounts. They're living with roommates even though they could afford to live alone. They're driving paid-off cars while their friends are posting Instagram stories from their leased BMWs. They look broke now, but they're setting up to be rich later. Now let's jump to age 30 because this is where the gap between winners and losers starts becoming obvious. At 30, the median net worth is about $14,000. Wait, what? People only added $6,000 to their net worth in 5 years. That's pathetic. That's barely over $1,000 per year. Think about what this means. The average 30-year-old spent their entire 20s working and building their career, and they've got basically nothing to show for it financially. They probably got a few raises, maybe changed jobs once or twice, and their net worth moved from $8,000 to $14,000. Meanwhile, their smarter peers who understood compound interest and delayed gratification now have net worths of $50,000, $80,000, even $100,000 or more. The gap is already massive, and it's only going to get worse. By 30, you should have at least 1 times your annual salary saved. So if you're making $50,000, you should have $50,000 in net worth minimum. Most people are nowhere close to this. They spent their 20s thinking they had plenty of time to get serious about money later. They'll start investing next year. They'll pay off their credit cards after this next vacation. They'll get their act together once they make a little more money. Except next year never comes and the excuses keep piling up. At 30, the average person is earning about $55,000 per year before taxes. They're taking home maybe $42,000 and they're spending almost all of it. Their biggest expenses are rent at about $1,500 per month, car payments around $400, student loans at $350, and then everything else disappears into food. Entertainment, subscriptions, and stuff they don't need.
The 30-year-olds who are winning have completely different numbers.
They've paid off their student loans or they're aggressively attacking them. They've avoided car payments by buying reliable used cars with cash. They're house hacking by renting out rooms or living in cheaper areas. And they're investing 20 to 30% of their income. These aren't special people with secret advantages. They just made different choices. They said no to things their peers said yes to. They optimized for net worth instead of looking successful. And now they're 5 to 7 years away from having enough invested that their money starts making serious money on its own. Let's move to age 35 because this is where financial reality really starts hitting people in the face. At 35, the median net worth is about $35,000. So in 5 years from 30 to 35, the average person added $21,000 to their net worth. That's better than the previous 5 years, but still not great. By 35, you should have at least 2 times your annual salary and net worth. If you're making $60,000, you should have $120,000. Most people aren't even close. They're sitting at $35,000 wondering why they feel so far behind. The reason is compound interest hasn't had enough time to work because they started too late or they're not investing enough. At 35, the average person is earning about $65,000 per year. They're taking home around $50,000, and here's where things get interesting. Their expenses have probably gone up significantly. Maybe they got married, maybe they have kids now. Maybe they bought a house with a massive mortgage. The average 35-year-old with a mortgage is paying about $2,000 per month just for their house payment. Add in property taxes and insurance, and you're looking at $2,500 or more. If they have kids' daycare costs another $1,000 to $1,500 per month, suddenly that $50,000 take-home pay doesn't stretch very far. This is why so many 35-year-olds feel like they're making good money but still struggling. Their income went up, but their expenses went up even faster. They're trapped on the hedonic treadmill where every raise gets absorbed by lifestyle inflation. They make more, but they never get ahead. The 35-year-olds who are crushing it took a completely different path. They avoided the big house until they had serious money saved. They had kids but didn't let it destroy their finances. They kept their expenses low even as their income grew. And they've been investing heavily for 10 plus years. These people now have $200,000, $300,000, even $400,000 in net worth. Their investments are generating $20,000 to $30,000 per year in growth without them doing anything. They're approaching the point where their money makes more money than they do at their job. And they're maybe 10 years away from financial independence. Age 40 is where you can really see who understood money and who didn't. At 40, the median net worth is about $91,000. That's actually a decent jump from 35. People added $56,000 in 5 years. But here's the problem, it's still not nearly enough. By 40, you should have 3 times your annual salary and net worth minimum. If you're making $75,000, you should have $225,000. The median person at 40 is barely at $91,000. Way behind, and time is running out to fix it. At 40, the average person is earning about $75,000 per year before taxes. That's about $57,000 take home. Their mortgage payment hasn't changed much, still around $2,500. But now, they might have 2 kids in activities that cost money, aging parents who need help, cars that need replacing, houses that need repairs. The expenses never stop, and if you haven't built a strong financial foundation, the pressure just keeps building. This is why so many 40-year-olds feel stressed about money even though they're earning more than they ever have. They're making $75,000 but living a $90,000 lifestyle funded by debt and hope. Credit card balances are climbing, the home equity line of credit is getting tapped. Retirement accounts aren't growing fast enough. And the math is starting to look really scary. If you're 40 with $91,000 saved and you want to retire at 65 with $1 million, you need to save about $20,000 per year for the next 25 years. That's over 30% of your gross income. Can the average 40-year-old save 30%? Absolutely not with their current lifestyle. This is the consequence of spending your 20s and 30s not taking money seriously. You reach 40 and realize you're running out of time. The 40-year-olds who are winning have net worths of $500,000. Even crossing into millionaire territory, they've been investing 25 to 35% of their income for 15 years. Compound interest is doing heavy lifting now.
Their investments might be growing by 50 to 70,000 per year.
These people are looking at retirement in their early 50s. Not because they're lucky or special, but because they made different choices.
They drove boring cars, lived in modest houses,
Skipped the expensive vacations and invested the difference. Now they're approaching financial freedom while their peers are just starting to panic. Finally, let's look at age 50.
because this is usually the age where people either feel relieved or terrified about retirement.
At 50, the median net worth is about $168,000. That's a jump of $77,000 from age 40. Compound interest is finally starting to show up in the numbers. But here's the brutal reality: $168,000 is not enough to retire on. If you follow the 4% rule, that gives you about $6,700 per year. That's $558 per month. You cannot retire on $558 per month. The average 50-year-old is earning about $80,000 per year. That's about $60,000 take home. They probably still have a mortgage. They might have kids in college or kids who just won't move out. They're dealing with higher health insurance costs, and retirement is only 15 years away. If you're 50 with $168,000 and you want $1 million by 65, you need to save about $32,000 per year. That's 40% of your gross income. That's basically impossible for most people. This is why understanding these numbers early is so critical. The 50-year-olds who are winning have net worths of $1.5 million, $2 million, some even higher. They're not worried about retirement because they could retire today if they wanted to. Their investments generate enough passive income to cover their lifestyle. They kept working because they want to, not because they have to. These people made sacrifices in their 20s that their peers laughed at. They invested in their 30s while everyone else was buying bigger houses. They stayed disciplined in their 40s when lifestyle inflation was tempting, and now at 50 they have options that most people will never have. Now here's what makes all of this so fascinating and honestly a little depressing. The difference between the median person and the winning person at each age isn't talent or luck, it's choices. The person with $8,000 at 25 and the person with $50,000 made different choices. Same age, probably similar incomes, completely different outcomes. The person with $14,000 at 30 and the person with $100,000 made different choices for a decade. One invested, one spent. One delayed gratification, one didn't. The results compound over time until the gap becomes massive. By age 50, the median person has $168,000 while the winning person has $2 million. That's not a small difference, that's a completely different life. One person is stressed about retirement.
The other is planning early retirement. One person is trapped in their job.
The other has freedom. Here's what nobody wants to hear. If you're behind these numbers right now, you can catch up, but it requires radical action. You can't catch up by doing what average people do. Average actions create average results. And we just established that average results are pretty terrible. If you're 25 and you have less than $8,000, you need to be saving 30% of your income minimum. If you're 30 with less than $14,000, you need to cut your expenses dramatically and invest aggressively. If you're 35 behind the curve, you might need to increase your income and invest 50%. The math doesn't lie. Compound interest needs time to work. The later you start, the more you have to save. There's no way around it. You can't invest 5% for 10 years and expect to catch up to someone who invested 20% for 20 years. The numbers don't work, but here's the good news. Knowing where you stand gives you the power to make different choices. If you're ahead of these medians, keep doing what you're doing and push even harder. If you're behind now, you know exactly what you need to change. The average person will watch this video, compare themselves to these numbers, feel bad for a few minutes, and then go back to their regular spending habits. The person who actually wants to win will use this information as fuel. They'll cut expenses, increase income, and start investing like their future depends on it, because it does. These age-based net worth numbers should be wake-up calls, not finish lines. They show you what average looks like, and average is struggling, average is stressed. Average is working until 65 and hoping Social Security doesn't run out. You can do better than average. The question is, are you willing to make different choices than average people make? Are you willing to look broke in your 20s to be rich in your 40s?
Are you willing to drive the paid-off Honda while your friends lease BMWs? Are you willing to skip the expensive vacation to max out your retirement accounts? The person who figures this out at 25 will be a millionaire by 40. The person who figures it out at 30 will be wealthy by 50. The person who figures it out at 40 can still retire comfortably. The person who never figures it out will work until they physically can't anymore. Drop a comment and let me know what age you are and whether you're ahead or behind these numbers. And if this video gave you the wake-up call you needed, subscribe to Mike Capital because we're exposing the financial truth that nobody else will tell you.